Hey all, Peter here from How to Invest HQ, back with another month of top stocks to buy, and right now we're going to be covering June 2014. I'm going to give you a quick follow-up on last month's picks, and then we're going to go over four great stocks that I think are good, make for good buying opportunities this month, and some I've already acted on. I know I missed May. My computer did run into some troubles, but it's repaired, and we are back now. So I plan to still put out this video every month. So just a quick clarification, I classify the best buys into two types, long-term and short-term. Short-term stocks I think, could pay off in the near future. Long-term stocks represent growth stocks that have, kind of come down in price or are at price at where it's a good entry point now, but, they still definitely have room to come down. It's something you might want to be looking to hold for a few years to get good results from. So here's a quick update on May's picks. Overall, May was a good month for the stock market. So of course, my chart's going to look good. The S&P was up about 2%. So with that in mind, or about 2.5% from when I made my original post for May versus now. So really, Wells Fargo, that was a short-term play, right in line with the S&P, maybe a little bit up if you got in for the dividend. Starbucks, that was a short-term play, handily beat the S&P, plus it's up some. And then some of my long-term plays really panned out well last month. Google, LinkedIn, and Chipotle were all up over 6%. And even though they popped a lot in the short term, I classify those as long-term because you don't know when these kind of moves are going to come. With a growth stock like this, you can expect these kind of moves, once every couple of you expect these kind of moves a couple times a year, and you really don't know what month they're going to happen. And some years they might just be down a lot. So that's why I classify all those stocks as long-term picks, even though they panned out very well. So for this month, I'm still going to stick to LinkedIn long-term. It did post that 6% gain in May, but then it came down a few percentage points in the first few days of June. So it's just a little bit over the S&P average during that time, and I recommended it last month. So of course I'm going to recommend this again. And I think that LinkedIn's really come down a lot in value, and now I think it's actually quite cheap for its growth rate. It's only around 11 times revenue for the last 4 quarters of revenue. That's, price to revenue. And it's actually under 10, around 9 for the 2014 guidance. And I really think that could change as well because management usually lowballs LinkedIn guidance. I mean, we could see a pretty big earnings surprise for the end of the year, I think. It wouldn't be surprised if at current prices LinkedIn's trading at 8 times revenue, which is very cheap given that LinkedIn is growing, their revenue by 40% or so still, year over year. Amazon, they're a good long-term pick. This video, unfortunately, is a bit late. I did make my post on Wednesday, and then I finally got my computer up and running this weekend. So it's actually up 7% just before, from when I made the post until right now. And the reason it was up so much is that the stock jumped on the news of an announcement of a new phone. And I'm actually not very excited about this. I don't really care for Amazon because of a phone or any of their gadgets, really. I mean, I think the Kindle is good because it lets them sell ebooks. And I guess they're trying to remain relevant in that space, but I just don't see Amazon, unless they come up with something that's really fantastic, which I don't think they are. Our thing has extra sensors, big deal. If you don't have the developers behind it, then it's not going to take off. So, I mean, some people will buy the Amazon phone, I'm sure, but that's not really why I'm buying Amazon. I like Amazon because of their core business. I like their e-commerce. I'm more interested in Amazon's expansions into grocery, wholesaling, and same-day delivery, and their continued increasing infrastructure. I like their, that they keep building fulfillment centers, that they plow all revenue back into their infrastructure. That's what's exciting to me about Amazon. It's not very sexy. We're, selling wholesale products now instead of regular products. That's not very exciting, as opposed to, we're going to make this high-margin phone. But that's okay because Amazon, it's those not exciting businesses that Amazon really excels at right now, and that's where their growth is going to be over the long term for sure. I mean, maybe the phone will pan out, maybe it won't, but that's just a complete side interest, and I'm not really particularly interested in it. This is a How to Invest HQ portfolio stock, so I bought in at 303 about 2 months ago, so it's posted a nice gain so far, but I still think that this is a great long-term play, even at the current price. Even after this 7% run, $330 a share is cheap for Amazon. You know, they were trading at $400 a share in late January of this year. So they're still down, you know, almost 20% off of that high. So there's still definitely plenty of room to enter into Amazon. Home Depot, and this is kind of a speculative play for me. This is a short-term pick. I'm sorry I didn't classify it in the presentation. And the reason I'm bullish on Home Depot right now is that their site traffic is unusually strong. And I first, started investigating this because I do own Zillow stock as part of the How to Invest HQ portfolio, which is up 40% this, in the past couple months. So I was looking into Zillow and seeing, do I need to take profits or am I going to hold here? And I was looking up their traffic and I thought it was, incredibly strong. And then I looked up competitor Trulia, also posting strong traffic. So I'm starting to think that housing in general might be going through an unexpected boom right now. We might be at the start of that. And this traffic pattern for Home Depot confirms it. And I don't know if you can, this is kind of hard to see, but normally Home Depot has a very specific pattern. They're, fairly low in traffic in the winter and in the fall. But then starting around May through about mid-June, and then a second peak up through about, the end of August. That's their main traffic season. And this spike here is Black Friday. This is internet holiday shopping traffic. So of course, all retailers spike around this, end of November, early December period. You can see it here too. But what we don't usually see is that, their Home Depot's main selling period, this prolonged period of increased traffic, is usually much less than these, the holiday shopping period in terms of its peak. But this year, we're starting out the same level, and then we get a little bit higher through the first quarter. Then all of a sudden in March, we start spiking. Back here we saw peaks starting at March 1st, but we're just seeing, uncharted high here. This is actually the highest across the entire table is, about mid-April. So in mid-April, we're seeing traffic to their site that actually eclipses the relative traffic of the holiday shopping period. So we're seeing unusual interest in Home Depot's website, and I think that they're going to post strong sales as a result. I actually already bought some shares of this, and I bought this is a little risky of a play, but as I am, self-employed and a consultant, I do pay estimated taxes. So right now, I'm going to owe money, at the end of April 2015. So I'm putting some of that extra, I'm putting some of my tax money into stocks, and I'm going to put it in Home Depot here with the plans of selling sometime within the next, 10 months. And if I get, a 5 or 10% gain, I'm going to execute and take that money. And I'm choosing Home Depot here because I think that they're very steady. Their stock price has been pretty flat over the past, year or so. They pay a steady dividend. It's kind of a low-risk investment, and I think it's got a decent chance to pay off. So I'm going to go ahead and go with that. The last stock I'm going to recommend for June is actually Apple. And Apple, I've previously recommended them as sort of a good buy in the 500s, and now they're, 25% up or so in the past few months. But with that said, Apple has got so much momentum right now, there doesn't really seem to be a ceiling on how high it can go. People are putting money in, but nobody's really taking money out. And that's Apple only now is getting to what I would consider a fair value. The reason I say that is I've thought that they should trade at a PE of around 15 to 16. They should be higher than Microsoft, which they only just passed, and they're still only about one PE ahead of Microsoft. So that's about where they should be given their revenue and, their ability to buy back stock and their, huge earnings. And the fact that they're able to grow earnings a little bit just through more phone sales, it's really encouraging. So I added a large chunk of this stock back in March, and I'm actually still going to hold right now, even though I'm up, it's just like the Zillow. I'm up 20%, but there's such strong momentum that if you sell to take your profits right away, you might miss out on some run. And I still think there's some run left in this month because the stock's running up with nothing really going on other than a stock split. There's no guarantee that a new product's going to come out. There's rumors of iWatch. There have been rumors of that for over a year. So if you do want to get in on this as a short-term play, I put in a stop-loss order about 3 or 4% under where you buy in at. That way, if the momentum ever shifts, you'll be able to protect yourself from under experiencing a major loss. But right now, I think that Apple's just got positive momentum every day. It's in the green, or flat. It doesn't really seem to go in the red, and I still think you can get a couple percent gain this month as a result. So that's it for this month's picks. I'll go ahead and subscribe to my channel, and I will have an update next month.